All right, so that was market structure we just learned about. Now, I don't have a section in the ebook about volume and price action, but I'm just gonna go through, it's just gonna be a quick video explaining how that looks on a chart and how you need to combine it with, market structure, reading candles, and everything like that to make better decisions when you're trading. So, look at this right here. I'm on a 5 minute chart, and then I'm just gonna. This is an example of support right here. This is how you would find a support. You have we're around like four. Let's just give say 4.99, right? Every time we come near 4.99, you know, we bounce. So that's enough for me to draw an area of support. So I would just find get the line and just go draw the trend line and just that's support right there. And then I want to show you so volume and price action, right? Obviously, the candlesticks and the market structure, everything like that, that's price action. That's everything about price action. And volume represents the total amount of shares traded in that given time frame. So I just want to highlight like how you combine volume and price action to show like to see significance in what you're analyzing. So look at this down here. I just included this so you can see the volume a little bit easier. But and it actually has like the histogram and it's labeled so you can actually see the volume, right? So look at this. We're at this level right here. We marked as a support because we had a key the area of support where we have one, two, three touches. Um, and I just want to show you how like these key candlestick formations, how you combine candlestick formations with a support level or something like that, and the volume. So volume and price action is where you're combining volume and price action to show you like significance. So we have this doji and we have this hammer candle at the support. We already know support means that there's a surplus of demand at that area, right? So we have the surplus of demand based off of the support level. I'm gonna make it bigger and make it gold for you. So that's support. And then we have this hammer candle right here, which represents bullish, just bullish action, right? Because price came down, interacted with price, interacted with this area of price, and then there was enough demand, so it would end up closing up higher and create this wick, showing that even though there was selling below the level and selling at the level, there was supply at the level. There was more demand causing the price to go up. That's the hammer candle. And when you combine that with the volume, right? So this line right here, this is the average volume for all of average trading volume, right? Look at the hammer candle. You see that it's above average down here. It's above that average line. And it's higher than the rest of these candles. So that just gives you more kind of confidence that there is more demand because just for the fact that there's way more shares that were traded in this 5 minute time frame than the average amount of shares traded in a 5 minute time frame on this stock. Um, and that's how you combine those pieces of information to show you, all right, this is actually significant. Like, so you say there was nothing else here, right? Say you recognize this support, and then you saw that boom, look, this above average volume hammer candle. You could enter the trade right here, and you had to have a high probability chance of it working, just because you had the volume, you have the support level, and then you have the hammer candle. And individually, those things all represent demand or, you know, in some interaction of supply and demand happening at that area. But because you have all of those different things telling you the same thing, that's information that you use to make a decision to take a trade. And those are called confirmations. I don't touch on that in the ebook. I wanted to make it kind of course exclusive, but All of those different pieces of information that you then put together and they all match with each other, that's a confirmation. So you have one confirmation being volume, another confirmation being the hammer candle, and another confirmation being that you're at identified demand or identified support level, which represents demand, and then we actually have price action with associated volume validating um, the concept that there's demand at this area, and because there's demand, price will go higher. And I'll show you again on another stock, right? This is Meta. Um, we have an uptrend, right? So price is going up. You see higher. This is a lower. This is a low, and then we have a higher low, and then a higher low again. Um, and that creates a support level, a projection of what the demand might look like in the future. So we have two touches right here, and then say this wasn't here yet, price comes up and then it comes back down. Because of this support level, price can come down and it might bounce again. Um, and then it's still the 5-minute chart. So like price came down, there was no support at the time, but you can see that there's demand coming in because we're on that downtrend, and then we start seeing hammer candles. We have two hammer candles down here. I might need to get like a air purifier or some shit. I know I've seen it so much. But we have the hammer candle and associated volume again. And again, yeah, that represents demand. So we got this hammer candle with super high volume, and this hammer candle doesn't have as much volume as the previous one. Like it's kind of average. It's average volume, but just the fact that we have this one, and that was 15 minutes before this one, they still represent that interaction between supply and demand. And then also, like, it's important to know where a candle closes, right? Look at this. This candle opened at 471.12. It traded below 470. And we had all of this volume. It traded below 470 and then closed higher. And then look at this candle, right? This candle traded below 470 again, and I'll mark the line on 470 so it's easy to for you to see. So this level right here, this level is 470. This is a support level, or I don't know if it's a support level, but we're just talking about the price in 470, right? We got the doji right here, or the hammer candle right here, and huge volume. Then it goes up, comes back down again with a wide body candle, but it does not close below. Right? It can't close below the level. And then this one again, it opens above the level, trades below it, but it doesn't close below it. And then it ends up trading up higher. So like you would use these two pieces of information plus the fact that it's holding above 470. Like this candle, all these candles are above 470, showing that there's demand at 470, and you can say, all right, this is a support level now. And then look at these hammer candlesticks and the price action paired with volume, showing you, all right, 470 has demand. And then as we get like a wide, price moves higher and higher, we got this wide body candle showing that there's a huge surplus of demand and super strong sentiment with associated above average volume. And because of that volume is above average, it shows that there was way more shares traded in that 5-minute time frame than the average of shares traded in a given 5-minute time frame. You know what I mean? So, that just explains, again, the interactions of supply and demand and how volume and price action are supposed to be used in order for you to make decisions when you're trading. And that's just basic VPA. I'll have a whole section on that. And that's about it.